Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, September 7th. Mike Boutros with you on the horn. Hey, good morning, Jay, Kay, everyone in the room. Great to see you this morning. Hope you guys had an awesome Labor Day break if you're here in the States. But we are coming into September with some spectacular plays. So we got a lot to cover. Although things are kind of still tight from a volatility standpoint, the pivots that we got, the moves that we've been getting on the back of the last release, specifically Friday's non-farm payroll, does leave a lot of things on the menu. So we'll hit DXY, Euro, Aussie dollar, Sterling dollar, gold. You can update on Kiwi, crude oil, dollar yen, Bitcoin, and we'll take a circle back and look at dollar CAD. Obviously, we have jobs Friday. We got the BOC on tap tomorrow, so dollar CAD definitely something on the menu. As always, questions, trade setups, feel free to throw them on the message board at any time. So let's jump right in. First things first, DXY. Recall last week into the start of the week at 3 webinars last week, 2 on Daily FX, 1 on SB. We're back here full-time on SB again. So the focus was to look for possible topside exhaustion last week. We came into the week saying, look, we came into a big rip at the close of August, right into resistance. The risk is for that downside move. Last week's focus was for the exhaustion play. We're looking for a low, right, in the DXY. 91.75 on the weekly chart is really where hardcore support comes in. We just tagged last week a 38.2. I'll show you the near-term charts in a moment, but the focus was to look for that exhaustion low. Non-farm payrolls was actually the print that you needed, okay? It was a dismal print on all counts. You saw wage inflation starting to pick up. That's picking up with the whole inflationary picture, guys. So guys who are like isolating that argument as the positive, okay, I'll give you that, but the number was disappointing, okay? Even though we got an upward revision to the previous month, the number was disappointing. And ADP, which is the private sector payroll, which came out on Wednesday, was kind of the precursor. We talked about that in the webinar. So Friday's dismal read was the low that we needed. Here's what the index looked like last week. Here's what the index looks like now. So on the daily chart, before we get into the intraday, you can see that the low essentially got caught right on that 38.2. We dipped below it, but we couldn't get much traction there. There's 100% extension just above. I removed that. The 38.2 is right here, and it's exactly where we dipped Thursday, Friday, non-farm payroll failure. That's exactly where we need to see the rebound. Now, I don't think the decline is done yet. Just as a disclaimer, I faded moves in Euro and Aussie. I'll go over both of those, exactly how they played out. I'm still holding a little bit of Euro, but the whole point was looking for that dollar exhaustion. Here's the recovery. Now, into the start of this week, the risk is for topside exhaustion in the dollar. So that recovery that we're seeing since last Friday to exhaust a little bit for a pullback. And that pullback, guys, that's what's going to be the tell. If the pullback makes a deeper cut and we strike a better low, that actually might be the terminus of the pullback or the correction off the yearly high. If that pullback holds above the monthly open, it holds above that 38.2, then you're essentially looking to suggest that that low is more significant that we registered last week. So it's just the first few days of the month. We're still keeping it nimble. Here's what the intraday chart looks like, and here's what it looked like last week. So not much change from Friday, or this was, I guess, Thursdays. As we were coming into this report, there's that 38.2, dipped right below into non-farm payroll, and then you saw that quick pullback. That was the exhaustion print, in my opinion. Near-term resistance right now is 92.40. If this bounce is just a correction and the medium-term trend is still lower, this is where you'd expect possible exhaustion. Now, again, I'm holding a little bit left on Euro, quarter position left, just to see what kind of inflection we get here. But if this breaks, look for the stretch towards 92.50. Look for the monthly open at 92.66. If this falters here, that's the scenario I'm talking about on the daily chart, where you look for this to strike a little bit deeper of a low, closer to trend support, closer to the upslope support. You got the 52-week moving average converging on the August lows of last year, right there at slope. So a little precarious, okay, but the positioning, the play has been very clean. Non-farm payroll, again, people will ask, and the average retail trader will say, well, that doesn't make any sense. Why is the dollar rallying when the jobs data was so bad? Doesn't that mean the Fed needs to hold? Wouldn't that be dollar negative? And here comes the circle, the rabbit hole that the retail trader will fall into. The dollar had already been beaten down. We had already had, I think it was, last time I count, I'm not going to redo it, I think it was 8 of the last 10 days were down. Bad news will only perpetuate that trend so much further. The exhaustion trade is always something I'm interested in, and I think Friday was the perfect clip. So look, looking right into the open of the week, right into the open of the session, as we open up US trade today on the back of this holiday weekend, 92.40, 92.50, both areas of interest, looking for inflection here. Need a close above the monthly open for that objective breach, that objective shift back to the upside. Until we do, the risk is still that we still get one more washout towards trend support. Any questions on DXY? The US is pretty quiet as it pertains to major economic announcements, okay? You've got a lot on tap starting tomorrow at the BOC. Heading into Thursday, you got the Eurozone, the ECB interest rate decision on tap. And then right into the close of the week, we get CAD employment numbers. So it's still jam-packed. We're still just setting, albeit a massive monthly opening range for September, but we are just setting those opening ranges. Still want to stay a little nimble here. So that is DXY, number one. Here is Euro. And again, I'm still holding a little piece of this. The focus, as we talked about Euro last week, was really, again, even starting all the way back to the weekly charts, right? Big resistance at a basic 38.2 retracement of the decline off the highs we made in May. But it's not just the 38.2 retracement. It's also the close highs we made back here, August of last year, against some symmetry in that. Love that. It's also the swing highs that we made back in July. Okay, it's also the median line for this broad formation off the yearly highs from last year and this year. So we were looking for something there. Was that in and of itself the trigger to try to pull a short on Euro? No, it was Friday's exhaustion print. And here's what it looked like on the daily chart. Again, here's what it looked like back on the 1st of the month. We were just looking like we were peaking a break of downtrend resistance from that swing high back in June. We did get the breach, accelerated higher right into that 38.2, right into the highs from July. That gives you an 1894, 1908. That's exactly where we petered out on Friday, and that was the exhaustion print on the back of the NFP print pullback. Excuse me. Now, again, I've already faded out of 3/4 of this position, just leaving a little bit on here. If we get that last strike lower, could get a strike closer to 1840s, but at the end of the day, we have to let the weekly opening range pan out as it's gonna. Here's what it looks like on the intraday. Okay, and here's what it looked like. Again, just too clean. Here's what it looked like last week. So you got that break above the August open. There's the surge into key resistance, 1894, 1908. Got a pretty tight stop. Again, when I got into this, it was really, really tight, just below the 19 handle. Again, a limit took us out a half of this into the open of the week yesterday, 1865. Saw this bounce and overnight, took another quarter off here, 1865 again on this last drop. If we get the break, I still got a quarter on. 1830 would give you the 2 equal legs lower. If this falters here, because again, it is uptrend support as well, you still risk another run towards 1910 or even 1965. But this is a big pivot in price. Don't take my word for it. Here's what it looks like in price going back a couple months. So again, the justification was there, sort of the trigger on the release was there to try to press that trade. It's a counter trend trade, so we haven't gotten validation of any reversals yet. You want to stay nimble here. If we break these lows, Look for that drive towards 1830, and we'll look for a bigger inflection there. At the end of the day, if we breach 1909, the July highs, you're essentially looking for one more spike, basically the DXY, that last washout lower. Any questions on euro? ECB interest rate decisions on tap on Thursday. No change is expected. As always, it's going to be the devil in the details with the commentary. So we'll see if the Jackson Hole comments and this sort of wait and see approach carries over. But that is euro heading into Tuesday. All right, number 3, here's Aussie. Also, same trade from last week. Okay, this one got limited out, so I'm out of this one, but here's what the justification and focus was on this. From the weekly standpoint, we were testing downtrend resistance. Obviously, remember, we talked about 73.28 for months and months and months. Okay, this was last month's open. This was the swing lows from May of 2017. Huge pivot in price. The downside break really kept us bearish. The first level of support, 71.21, held. And into the close of the month, you got this wicked reversal. So look, yes, last week's break back above 73.28 does put a hamper on the broader downtrend for Aussie. Okay, that inflection to me was big. The short that we took on Friday wasn't necessarily based on this chart per se, but again, it was the exhaustive trade. And if you look at Aussie dollar on a daily chart, you can see this thing had been ripping off the lows. Ripping. It was the same phenomenon we saw on the DXY. I think it was 8 out of the last 10 days were down into Friday. And we had a 38.2 of the drop from that high in May. You had the September highs from last year. That broke. Here was the stretch. The ideal scenario was to get an inflection off of 75, 74.98. We didn't quite get it. But again, the price action that was accompanying euro, the price action that was accompanying all the majors on the back of the really dismal print for me was still screaming fade. So another one where we got into a really tight short position. It was a really nice play. The limit was 73.96. Okay. I had this staggered actually, so it took a little bit off at 74.20, and then it took the rest off at 73.96 here. So we're out. Want to see how this pans out. For all intents and purposes, this is uptrend support at a major inflection point. So I want to see what happens. Same exact trade as euro, right into the open of the week. If we rebound here, I want to see failure at the weekly open. Weekly open resistance at this point is like 74.50s, which is right below my stop. But if that fails, or I'm out of this one, but that's where my stop was. But if that fails, might be actually another entry point against that high for a move lower. Okay, if we breach the weekly open, forget it. We're probably going to see a test of 75 again, and then we have to reassess there. So both of the pullbacks plays, both of the quote unquote NFP trades sort of fading out here. Okay, if you're holding either of those at this point, you want to start to lighten the load right into the open of the US trade. Look for inflection here today. Keeping in mind tomorrow, BOC, we'll go over dollar CAD in a moment, but more importantly, Thursday's ECB print for this one and the Euro and the Aussie. Questions on either of those trades? All right, that is 1, 2, and 3. A quick look before we move on to, I know I've been showing you guys the 10-year yield, and again, the rally last week was just insane. I just want to note one more time, guys, we're heading towards resistance. I know it feels like a broken record. I've said that 3 times over the last couple of months, but we've made 3 tests over the last couple of months. So here it is again, 137.50. It's a basic 38.2 off the yearly high. Previous attempts also saw a major uptrend slope there, downtrend slope there back on the 26th. Nothing here this week. So even if we extend a little higher, watch. I think it's a little tricky sometimes. I'm sorry. Watch this. Sometimes I can't just get my hands on that circle. There we go. Okay, so watch just a tad higher into that slope, like let's call it 139 for yields. Again, a shift in sentiment. We look at this to see what sentiment is doing. You know, everyone's looking at stocks, march higher, march higher. I get it, but even that top side is just insane divergence as it continues to press higher. On the upside from here, slope dictates somewhere near like 45.90. Next major lateral level is 46.16. Initial support still 44.77. So not a very exciting, right, range that we're seeing in slope as far as stocks are concerned. But that's why all the more reason, if we do see a major inflection in sentiment or in yields, we'll look to see if that translates into a broader risk on or risk off move. So just something to keep in mind. As stocks continue to climb higher, yields are approaching sort of an interesting level of resistance on the upside. So it's a quick look at the 10-year before we move on. Number 5 here is sterling. So into the later part of this week, into Friday, you get GDP figures coming out of the UK. Here's what the British pound looks like. Big pullback. And point in fact, if you had played sterling on a percent basis, you actually would have had the better playback. This was another one I was also looking to fade on Friday, but I didn't want to triple up on $3 long exposures. It's just not prudent from a trading standpoint, while I loved where this thing turned, and even more so than euro, right? Well, maybe not so more so than euro, more so than DXY, but sterling, here's downtrend resistance. You don't often get sterling playing this neat. King of the throwover, of the false breaks of support. It's a notoriously professionally traded market. That doesn't happen too often. So we turned from downtrend resistance. I don't know how deep this gets. Again, for me, it's still a counter trend trade. Here's what it looks like on the daily charts. And here's our last update, by the way, for sterling. So, you know, that was an area of interest. We had the 100% extension, a 618. Those are my favorite Fibonacci confluences, but just higher. Uptrend resistance, downtrend resistance, and that's where she turned. Okay, threw over a little bit, 38.90, a little bit past the high here, but that's exactly where this thing buckled and closed on Friday. And again, always be mindful of the daily closes, right? You don't get that kind of reaction too often. So it was a beautiful pullback. My problem is, how deep does that get? Right now, as it stands, the major lateral level I'm focused on is 37.54. That's the objective monthly open, not Mike Boutros' opinion, not SB or Jamie's opinion, fact. So what do we do with that fact? Well, for me, that's what I'm going to need to break, close below, to suggest that a more important high was registered here. Until that does, it's the same play as Euro. It's the same play as Aussie. The reversal, the pullback, is testing the first initial areas of support. Watch today's close. Watch today's close. Now, if we take a look at this on the intraday chart, you can see that a break of uptrend support on the near-term channel does leave me looking lower. But again, there's the monthly open. Take a quick extension off this just to get a measured move. The 100 is there. So what does that mean? It's past 2 equal legs. Is that a broader turn? Does that mean a deeper correction's on hand? For me, sterling's a wait and see. If you're in this trade and you're holding a short, I'd bring, excuse me, my stops down to, it's definitely break even or better at this point, but maybe along this slope, give yourself a little bit of room into 38 again, 38.40. But you really want to see reaction to 37.54. If we break back below that, again, I think there's merit to a larger pullback here. Until we do, I'm cautious. I'm cautious on the sterling pullback. Okay, GDP figures are on tap on Friday. Year on year, expected to come in at like 8%, down from 15. 3-month average, 3.8%, down from 4.8. So softer prints are expected. Into the start of next week, interestingly enough, you get employment figures out of the UK. So there's a lot of stuff on tap, is the point. Let's see how deep this pullback gets. Look for inflection at 37.54. He'd need to close back above basically the swing high that we made here, this slope, to shift the focus back towards 39.90. Questions on the British pound? Okay, also from that same update, number 6 is gold. Here's what gold's doing. Bigger pullback, bigger fake out. Here's what gold looks like on the weekly charts. What do we do with this? When we look at slope being broken, but the lateral levels of significance have not been. And that single lateral level of significance, guys, was 1827, 1828. It's shifted a little bit because it was based on the 52-week moving average, which has dipped down a little bit. So I gave you 1827, 1828. It's now like 1826, 1827. But here is, what the gold trade looked like last week. The primary focus was what kind of reaction we get right there. Okay, so we did close above slope, but we didn't close above that, again, confluence region of Fibonacci support, 618 off the high from May, and also that longer term moving average. The daily chart had a little bit cleaner of a view. So whereas this looks a bit mucky and actually does look a bit bearish, here's what it looks like on the intraday, or the daily chart rather, first. So that level was loaded up, right? 29, excuse me, not 28, 29. 1829 to 1826 is 618, same one we're looking at on the weekly chart, but it was also the objective July high day close, which capped the advance in August, also capped the most recent advance. And this was Friday non-farm payroll. It looked like it was breaking out. And I even wrote a piece on daily effects on this. If we had closed above 1829 on Friday, would have been a game changer for me. That would have been an invalidation of the 52-week moving average. Huge Fibonacci level, clearly broken and closed above. And then all of these slopes that we've been looking at would have been invalidated. Well, we didn't. It's exactly where we closed. Here is Monday. Again, holiday in the US, not much to look on. Here's the open of the week. Now, I have a sliding parallel here, which has offered decent inflection, 1 touch, 2 touch. It's the same slope that we've been working with off the yearly lows. You had nice inflection here, decent support, and we're there now. I don't want to focus on that. The real play here is the monthly range lows from last week, 1805, and then 1795. It's going to be the 2012 high. Okay, huge level, major pivot in price, converges on former slope resistance right down here. So a little bit of turn here, right? You didn't have a divergence turn, but essentially I would chalk this up to a 60 rejection here in momentum. Risk for a little bit of a pullback. Now, again, this does play well with the concept of some dollar strength. So again, the market dynamics ain't nothing looks disjointed. I mean, I could say stocks altogether are disjointed, but as far as more tangible assets here, I think it looks pretty clean. So here's what the intraday chart looks like for gold. Looks like we've broken near-term uptrend support. Okay, looks like we rejected that 1826, 1829 level. Again, here was Friday. There wasn't much of a trigger here. Regretfully, I'm not in a short. Whereas you got that big spike and pullback on euro, big spike and pullback on Aussie, even sterling into the close of the week was a decent signal. Didn't really get that in gold. We closed right there. So if you missed this one, no problem. I missed it too. Looks like we're going to get a possible breakdown a little bit lower. 1795 is really where I'd want to see a little bit more of a concrete rebound, inflection. At the end of the day, you need to break above 1830. 1829 here to mark resumption. The broader trade is still constructive. Again, just for the record on gold, longer term, ain't nothing changed. It's just that in the medium term, might be another rejection at resistance here. Daily chart, rejection of uptrend resistance, the underbelly of this former support, break, shot through, resistance, maybe a deeper pullback. But we'd have to assess that all is determined today by how we react on the downside if we get towards 1795. Questions on gold. Number 6. Okay, Kiwi was, again, very similar play. I didn't take anything on this one, while it was, again, a decent play on Friday. It's the same exact positioning. For me, it was more scary. For me, I'm not gonna lie, the Kiwi breakout is the one that I thought, if the dollar is gonna just go to straight to hell, this might be the ripper. Why? Well, it was this region right here that I was looking at. The 2018 open has been a major pivot in price. The 618 from the drop was like nothing on Friday. Ripped through that, closed above downtrend resistance. Looked like to me it was just going to go a straight shot towards 72. So I'm not quite as confident on Kiwi. Here's what it looks like on the weekly chart. Okay, again, 618. Turns out, if you take a little bit more an objective approach, again, slope, that's exactly where we failed. A little bit of a pullback, closed right below it. It wasn't enough for me to do anything. Again, Fibonacci, we're right through it. If you take a 618 from the high of the year, you're not even close. Brings you closer to the 2021 open. But there was just nothing here for me to play with. So I'm more of a neutral stance here on Kiwi. I wouldn't want you to double up if you're holding anything on Aussie. If we take a more objective look here, Kiwi actually cleared some range highs from late June, July, and August on that move, right? 1 high, 2 high, 3 high. We broke through it and closed above. Aussie, you know, it's not quite the same strength of the signal. Yeah, we cleared last month's highs, but you know, it's not quite the same signal. So don't treat these the same. It actually puts an interesting scenario on Aussie key, with that posting a massive already seemingly outside reversal today. So I do want to actually see what this does as sort of an indicator, a barometer, if you will. But for Kiwi, you know, I'm neutral here. If anything, it's going to be, I want to see another close above Friday's close, if that makes much sense. Something like this to suggest, okay, you know, 71.50 close. All right, fine. Let's keep that focus on 72.12, 71.90, but not something I'm really interested in getting involved in. Here's what the scalp looks like. Now, that side of the trade isn't so ugly, I want to say. Here's what Kiwi looks like now. So Euro levels unchanged. We just went over that. Kiwi, you know, we basically ripped into that 618, pounced through, and then failed right ahead of that upper parallel. We're now here back at support. So it's the same uptrend. If you take a parallel of that slope, guys, and mimic it to the high, that's exactly where we caught the high on Friday. Here's the pullback. So look, if we buckle below 70.90, fine. Maybe you get a drawdown to the median line. Maybe you get a pullback towards 70.30. Might be an opportunity there. For me, you know, with the positioning again, Euro looks like it's actually making another leg lower here, so that one's working out well. If you're holding Aussie, again, I wouldn't want to buckle up. I wouldn't want to double up on these, but it's a very similar scenario here. I think you'll get the cleaner break, okay? For Aussie, the break will be whether we close 70.40 or not, or 74 rather today or not, to the downside. For Kiwi, you got a little bit more to go. You got to get below 70.90, in my opinion, to suggest, again, that you got a little bit more important of a near-term high in play. If that does happen, by the way, quick retracement, right off the lows, and the 38.2 converges at a nice, healthy 70.30 region, right near slope support later in the week. Questions on New Zealand dollar? No major Aussie prints from the data front on tap this week. It's number 7. All right, so number 8 is crude oil. What a play. So the oil trade, well, let me just take you back to the weekly charts, right? The oil trade has been doing some phenomenal moves. A lot of people getting caught off guard on this. And again, the rejection at 63.30, which was 100% extension, got a little bit lower there, obviously. But that quick rejection and close back above 66.50s was huge. Now remember, Low week close for August. The highs for 2019, the highs for 2020, the opening range high for this year. Major inflection in price. Break below, shot lower, break above, shot higher. Low tolerance area. You're constructive above 66. That's just my humble opinion. If this thing pulls back and closes back below this major pivot, I'm looking way lower, actually. But for me, it's all about this pivot right here. And again, don't take my word for it. Keep following that cursor to the left, right? It's also the swing highs from back here. Swing highs, break, acceleration. A little bit of a setback here, but major pivot, major pivot, major pivot. So it's all about 66, 65. Here's what it looks like on the daily chart. And here's what the daily chart looked like back into the open of September. So the initial area was 50% retracement, 69.33. I was telling you guys, look either here or here for possible topside exhaustion. That's the breakout level. It's 71.17. So we stopped and faulted right in between on that slope. Okay, the time decay took us away from the 618, and we basically faltered like right there. So the monthly opening range rather is very tight. I still think you can get another pullback, but again, 65, 60, 66, 50, huge, huge, huge area of support. Major inflection. Any downside should be basically exhausted into this region, like here, like here, like here, right? Any one of those. So that's my line in the sand. That's all I got to say about crude, excuse me. That's pretty much all I got, right? Buckle above 71 gets you the resumption move. But right now, the focus is on this key support. Here's what it looks like on the intraday. 66.14 is the bottom end of that zone to 66.57 again. You can see that in near-term slope, if you just pick a pitchfork off the low, high, low, turned right ahead of the upper parallel. Let's see if we can't get support at the median line, at or around the median line. Any questions on crude? In fact, let me just see what a quick 100 off that high looks like. Woo, sweet. What's that? 67.11. It's really 66.15 in this area right here, right? But watch there. Keep your eye on that. That's crude oil. Number 8. All right, number 9. I have it on the list because I went over it, and I'm sure some of you are looking at it. The abomination. There is nothing here of interest for me. I am, still where I stand on this thing. It is a range-bound muck. Even that 110 level kind of got spit out a little bit. So you open up the range. It's basically 109.50 into 109.68. Excuse me, 110.50 into 109.68. It's still this basic range. Dollar yen is just, look, it's a mess. Okay, here's the weekly chart. I don't have anything intelligent to say here, guys. This is just, range, lateral, sidebound. If you put a pistol to my head, I do think you possibly get a stretch higher, but it's still at risk. The whole thing's at risk. We never saw a test of uptrend support. We did get a rejection of uptrend resistance, but ever since then, the last 4 weeks, last 5 weeks, I'd say, have been kind of a wash. Now, if we go laterally into the daily charts and look at this a little bit more objectively, you can see a contractionary range. A series of lower highs, a series of higher lows suggests that essentially we're looking for a possible breakout scenario here. But right now, man, the monthly opening range is super tight, sitting just above the 2019 open. So, it's another wait and see. It's another wait and see. Here's the intraday chart. Haven't really changed anything here from that latest update. The only thing that's added is the 618 extension, which caught the last stretch here. So no change. No change. Even that interpreted contraction Friday broke, and then we closed there. I had no clue what to do with this. I don't want to call it a break. I don't want to call it rejection. I don't know what to call it. So let's open this up. Whoop, a little bit. okay? And see if you can't get some sort of breakout scenario here. My problem is that even if it breaks this slope, I still want to see a break above 110.50 to validate sort of a actual breakout in dollar yen. Remember who we're dealing with here. This is a trade that is very, very oftentimes rips up retail pretty badly. So use some caution there in dollar yen, but basically looking for a breakout this week for sure. Okay, quick update on Bitcoin and dollar CAD, and we'll call it a day. Here's Bitcoin. Need support right here if this is going to hold. So remember, the last updates I've been giving you of Bitcoin has all been about this 51,000 level, okay? We look like we had a seemingly weird downslope here, at least in play for a little bit. We never got the full extension to the 100, and we actually broke at the upper parallel right here. That ripped, rallied right back high towards, excuse me, this 50,000, 614, 51,030. So you saw on Friday, right? We buckled back above. We're now checking that as support. That needs to hold for this to be warranted. Here's what it looks like on the daily chart, right? If we close back below this today, that's no bueno. That's the 618 from the decline off the highs we made in April. Just a very nice area in slope. I wouldn't want to see this thing close and buckle below 50,000, 51,000. If it does, I think you're in trouble. Again, it's the pullbacks are all minor. The pullbacks have all been, pretty pitiful, but that's the risk you're at. If we push back below this region today. So look for stability in Bitcoin here today. Next upside objective, there's nothing until 57,000. 57,128 to be exact is the 786, just higher is the objective May open. So some levels there to reference as we open up the week. Bitcoin's basically got to find support like really close right here. All right. Last but not least, I know I went out of way a little bit. Here's dollar CAD. We'll be looking at this one. Very interestingly, with great interest, I should say, this week as you head into Friday, you get those employment figures out of Canada. But man, it dropped and it held the close last week right at uptrend support. So what is that? On the near term, doesn't quite look like a major level as much as it does on the weekly chart, but nonetheless, there's more to be desired there on the weekly. Here's what it looks like on the daily. So didn't quite come off of uptrend support here. This is a different slope that we're working at with the weekly chart, than the weekly chart rather. The parallel for the same slope that caught the highs, that caught those lows, didn't really do much here. So I don't want to stress that slope any longer. The only thing I'm looking at into the open of the week is the objective monthly open, which comes in at 2644, 2614, excuse me, just a bit higher. Again, our last update looked like this, right? So that slope, we broke below it, didn't quite make it to the 50, and then we turned back higher. So the intraday chart, which looked like this, kind of looks a little messy now. Here's what it looks like on the 2-hour. So we broke that slope, didn't quite make it to the 618, and here we are right back looking higher again. If we go back into that former slope support and this breaches resistance, specifically the monthly open, like I said, that's your indication that we put in a more significant near-term low, as it were. But I'm looking for, excuse me, I'm looking for a reaction basically into the monthly open. So maybe a little higher into the US Open today. Look for inflection 2615. If that breaches, still major resistance at the objective yearly open. Again, not Mike Boutros' opinion, not Jamie's opinion fact. That's 2713. But the ideal scenario for me, why I'm not positioned here, was for a drive either into this zone or even as low as 2360s. That was huge. Or the slope. You didn't get either of those. So I'm not in this. If we buckle above 2615, you might have something on hand. Otherwise, the basic premise is to still look for possible low here to get a better position on the upslope. All right, that's all I've got on dollar CAD. Actually, that's the last update I have. If there are any other questions or trade setups you want to review, guys, feel free to throw them on the message board. If you missed Friday's print, you had a great weekend, blow it off. We're just starting off the month and things are looking pretty interesting. You still got the ECB on tap. Again, starts off tomorrow with the BOC, Bank of Canada, then the ECB, and then right into the close of the week, you got GDP figures from the UK as well as employment data out of Canada. So there is event risk that could spur on some decent volatility. Other than that, keep your eye on these dollar majors. We're making some pretty decent inflections, some pretty decent ranges. We're looking to see if this advance has more legs or the dollar recovery starts to teeter out early in the week. All right. If there are no other questions, we'll go ahead and wrap it up there, guys. I hope you had an awesome weekend. I hope you're ready for an awesome week. I will see you guys on Thursday to kind of update where we are, or excuse me, on Thursday to update where we are right ahead of the close of the week on some of these setups. But the basic premise is we're looking for whether the dollar recovery has more to go, possible topside exhaustion in the days ahead. Guys, have an awesome trading week, and I'll see you on Thursday. Cheers.